All right, good morning, everybody. It is Wednesday, April 13th, 2022. Um, we do have Easter weekend coming up, so we have a couple more days here. We'll be here today and tomorrow. The market will be closed on Friday, and then we have our Easter holiday. So just be aware of that. We won't be here Friday. We have our study session tomorrow, which I'm excited to get into. We're going to be focusing on multiple time frame analysis. So, very important piece of the puzzle for the way that I trade. So, hopefully, you guys can make it there. Of course, it'll be recorded, so available to anyone who is a member. Um, and I think that's it. So, let's go ahead and jump into the markets here and take a look at what the ES did yesterday. So we came in and we had a couple levels. We weren't necessarily biased one way or the other. We had a support level somewhere between 31 and 34 here that we expected would hold. We had another area down around 44.15 was an expected level, and then we were talking about coming down into that 4400 area where you see I have that major eye level at 43.97. Interesting to note that they came up in the overnight session and came right to 97 and failed, and then eventually came up, pulled back to it, and bounced above it, right? So really important level down there. That was one of the next targets if it could not get hold above 15. And then on the other side of things, we were looking to get up through this 66 to 68 area, and that would bring us up to 74 to 77. So market opened. We were in a little bit of a pullback, and I went ahead and tried a short, but we were right at our first support. So again, do we want to be shorting into our expected support level or buying it? Those are the two options, right? And unfortunately, my short was very short-lived and only went about 2 or 3 points, and then we held right where we expected there to be support. So would have been a great area to buy. However, missed out on the actual low and then got aggressive here on the entries, and that third entry off the 200 ended up holding for a 25 plus point push right to our first expected resistance level of the morning, which was again 60. We in the room I actually said the target's really going to be 44.66, which was right there. So we were looking for 66 as a target on these longs as a first area to take profit, and they came up in the high of the day, I believe was, let's see if I can zoom, I think it was 66.75. So went right into 66 there, and then we started pulling back and selling off. And again, it came down into 44.54, held it a million times here before it finally came up to the back end and failed from it and came down right back to 44.31 and 44.34, right? So came all the way back, got a long in here right around 44.31, and then the market did eventually push another 24 points or 23 points from that 44.31 area. Interesting to note where the market could not break through. 44.54 once again, our major eye level, and then went ahead to come down and traverse lower. And you can see once the market got below 44.31 to 34, which was that minor eye level and essentially a very important support and resistance area, once it got below there, it came up to the back end of 44.31 and again could not get through and was holding right below the 200 moving average here. Eventually peaked up through and came right to the VWAP. So if anyone was short from 31 here thinking that they're all safe, of course the bulls had to come in and really quickly just wipe out probably some of those shorts from here, come right to VWAP, and then it just became a seller's market. You can see the price started to break below our fast moving average. The fast moving average broke below the slower 200 moving average, and we went for a little bit of ride there. Now when we came down to the bottom, came right into 43.97, this shaded region here, we were looking at somewhere around 95 to 4400, and it just kind of chopped and chopped, eventually got below it, and then this is where we came up, and it seemed like the bears were going to hold below that major level, and then coming into the Globex session overnight here, it popped right back above, and you can see we're kind of playing around this level right here. It came down and bounced above it, and then once we got below it and came back to it, we're now holding below. So that's where we are right now, chopping around in the range of price from the end of yesterday. So let's go ahead, and again, I think it's just amazing to point out that the high of the day was our target at 66. Okay, the pullback was the hold at 31, is exactly what we expected. And then once we got below, we held these levels and broke below them. So just amazing stuff. The only thing you had on your chart were the major eye levels and the minor eye levels, I'm sure there's a great way to navigate and trade this stuff without any type of indicators or anything else. So let's go ahead and jump up. There's some interesting things I want to point out about this sell-off that's been happening ever since the end of March. So let's take a look here. I just want to point out, as far as the Fibonacci retracements go on these sell-offs, we had a high here, and let me just outline the legs that we have. So we have kind of this major leg up that gets up to this high right to 46.31, our minor eye level, and it pulls back, and it does kind of make, and actually it looks like I highlighted this already, but so let me go ahead and delete it. So, oops. It does have some smaller legs within it, right? But the larger leg was basically this whole thing down from the high all the way down to where that major bounce was. And if you measure that fib leg, you get the 61.8 right here at 45.8150. If you look at the beginning of April here, it came right to that 61.8, pulled back, right? And then we got these two probes. So of course, like I said, it's not perfect. A lot of times what they do is they'll go ahead and peak above a level and then maybe even come back and peak above once again and then fail and go exactly where you would expect it to go. So that was a hold of, again, just around the 61.8, and then they came up and peaked above it and failed. Then we got a new leg down. We got this whole push down all the way down, and we got this double bottom, right? Right to the same low again, and then it bounced. So right there, we have a new leg down from there to there, and we have a new fib retracement scheme from, and you can see the 50% retracement, which was this 45.1675, was exactly where the market came to and failed. Let's see, once, twice, and then the third time we hit it again, and then the market started failing from there, and we got this new leg down. So now this new leg down from about, again, 45.16-ish or 45.17 all the way down to this new low, which we made in the overnight session from yesterday. So that's the new leg down. If you measure that new leg from, I think the high was 45.1975 or something, down to the low, basically our overnight low from the day before today, you measure that leg, where's the 61.8? The 61.8 is 44.67 quarter. What was the high of yesterday? 44.6675, and again, our target when we were long yesterday was 44.66 right there. So we came up right to the 61.8 and turned about 3 or 4 ticks in front of it and failed and came down to make a new low at the end of the day there from yesterday. So just zoom out and look at this. Came down, bounced up, held the 61. Came down, bounced up, held the 50%. Came down, bounced up, held the 61. Do you see why I emphasize fibs every single day? It's because they just seem to work over and over again. Now let's look at really quickly the leg from the overnight session here on a shorter time frame. In the overnight session here, we have this smaller leg. We have the high of yesterday down to the low of yesterday. And where's the 61.8? Right here at 44.31. And the market so far came up just in front of it about a point or two or 3 points in front and has failed. So you can see over and over again, these fib retracements just work. So I wanted to emphasize that. If you just came into the room, I highly suggest you going back and watching the first few minutes of the pre-market this morning. Not only did we cover some of this fib retracement stuff, but we also talked about some of the major eye levels that have been holding for the last day or two, almost like to the tick perfect, right? So let's look at this morning. Look at the daily really quickly here. Yesterday, let's zoom in a little bit here. Here's yesterday's candle. A major wick to the upside, and then a close at basically the lows of yesterday. So it's looking very, very bearish, obviously. And if you watch the study session on candle wicks, I mean, what does that look like to you? That looks to me like we're very, very weak right now. We got a huge wick to the upside, closed at the lows, and now we're still looking pretty weak here on this new daily bar. But again, we have a lot of time before this actually develops and closes, so can't say anything about that candle. But this right here looks very bearish. Now, what is the interpretation of that? Obviously, we would expect it to continue going lower, but here's the thing. If you remember back to the candle wick study session, if the market ends up breaking up through the high of this very bearish looking candle and gets through the high of that wick at 44.6675, the high of yesterday, we now have a negation of that bearish candle, which should lead to some type of breakout back up. The question is it going to be a fake out? Because we see this all the time. The market comes to a critical level that we're watching, and they peek through it, and so it seems like we're going to get a bullish breakout, and then all of a sudden, the next thing you know, 10 minutes later, we're now selling off very aggressively. So remember, just because we break above it doesn't mean 100% we're just going to rip to the upside. But it is a clue to us in real time that maybe we're starting to negate that bearish stuff and we're going to get the breakout to the upside. So just keep that in mind based on this previous daily candle here. I'm going to get rid of that and that. Outside of that, there's no indications of divergence on the daily right now. The last time we had a divergence indication was back on April 7th, and you can see the market did, it closed here, and when the new candle opened, they tried to push through, and it was a peak above and fail. So you can see let me see if I zoom in a little bit more here, so you can actually see that candle. The market closed up here at 44.95, give or take, opened and started pushing, and then peaked above it, and then failed. So that's something else, like I was saying over here, could happen. Anyway, I'm going on a digression here. I don't see any other divergences. I do want to point out that we are holding right now from the 50% retracement of this very specific leg here. Like I said, we could redraw this to encompass everything, which is totally valid, but this specific leg itself from the actual major swing low to high is also pretty valid, and we're still sitting right there at 50%, and just in front of that major swing that we've been watching at 66.50. So pay attention to that. Wouldn't be a bad pocket there to see a bounce out of. But if that doesn't hold, we're right down into the 61.8 retracement of this very immediate leg, which happens to be the next major swing high that we've been watching for months probably now, or at least a month or two, down here at 43.25. Let's go down, and the 4-hour, I don't think there's really much to say. We do have an argument for a bullish divergence off the low of yesterday, but we also have a nice bearish argument from the high of the overnight. So in this instance, we have a counter signal, and Don, we talked about this for you today. I think it's still your day for you. For me, it's the morning. So we talked about this last night. We've got a counter signal, a bullish divergence off the low in a downtrend, right? Because we're selling off. But we also have a bearish continuation, in this case, it's not necessarily a hidden divergence. It's actually, an exaggerated or exotic divergence, but we've got a divergence in the direction of the current trend, which is down, but we also have a counter trend bullish divergence from the low. So right now we're kind of stuck between those two levels, the low of yesterday and the high of the overnight. Breaking through the high of the overnight is now giving us a little bit more faith we're going to come up and test the high of yesterday, which, if you remember to a couple minutes ago, we said getting through the high of yesterday is going to give us a little bit more faith of a breakout to the upside, assuming we don't get a little peak above and fail. On the flip side of things, with a 4-hour bullish divergence from the low, I think we might have, well, we don't have a 60. So the thing is, we don't have a huge confluence of bullish signals down there. But if we break through that bullish signal on the 4-hour, that's going to then obviously open us up for all the stuff that we have down below the low of yesterday. So let's get into the 60-minute and look at all these little levels that we are going to deal with this morning. So we've got our eye levels on there. We've got our daily power levels here. And again, let's look at this. If the market does break below yesterday's low, which is 43.7550, and keep in mind we do have 81 quarter sitting there, which is a minor eye level that cannot be ignored. So 43.81 is in the way, which in that level happens to be the low of the overnight session from yesterday, right? Because we came down basically to 81, 82 and bounced out of it and then pulled back and held it once again and then got this huge bullish push yesterday morning. So this little area right here is still potential for there to be a reaction. If this does break 81 and then 75, we've got this major swing that I've been talking about for a while at 68, and the actual number is 60, I guess it's 67.50. So 67.50 is a swing from way back when over here. So seeing a test of that and some type of bounce wouldn't be surprising. And then a little bit deeper, we've got our major or our minor eye level at 61 quarter correlating over here with the rejections that we got back on March 17th. So basically the high of the day or high of the overnight session and then high of in the morning there was right into this 61 to 64 area. And we got some pretty violent failures from there. And then once the market came up above it and pulled back, we ended up holding just above that area for this continuation to the upside. So that's 61 to 64. That's the 67.50 swing high from a larger perspective. And if that breaks, then we're down into 48 to 50. And then if that ends up breaking, there probably are a few little things in between these two major levels here. But if 48 breaks, I think it's probably a good sweep all the way down to 43.27 and 43.2450, our next major level. That would also be the 61.8 retracement. And let's zoom out once more. The whole push, this whole leg up that I drew a fib on that higher time frame, the 61.8 retracement, remember we're holding the 50% retracement right now, if you can remember to a few minutes ago. 61.8 happens to be right down there in that pocket where our next major support and resistance level is. All right, so that would be that larger target down. And if the bears continue to just chug and chug and chug, then we've got 06, we've got 42.84, and then we're down into this little zone here between 42.62 and 42.63. And then from there, 42.40 is the next major support and resistance level. So keep in mind all of these general zones here, general levels on the downside. Now, the flip side of things is if the bulls do end up holding and getting some type of rally here this morning. And if they do, we have to consider what we're dealing with up above. To do that, I think I'm going to go down to the 30-minute chart and we'll look at what we have above us here coming into the open. So let me go down. This is the 10. the 10 might actually be fine. So let's look at it here. Right now, we're testing and playing around right where the market closed yesterday. So you might see this very fine white dotted line coming across over here. That's where the market closed yesterday, and we're kind of just playing around. And notice in the overnight session, we came all the way out, we came right back down, and now we're playing around right up around the open or around the close from yesterday. If they do end up breaking through the close from yesterday and through 43.97 here, there's a couple things we're going to want to pay attention to. Let me see if I could zoom in a little bit more. Perfect. So here's our fib leg from yesterday. We've got the high of yesterday, a very obvious high of a leg, and then this push down to a very obvious low. So if you throw a fib across there, we've got the 50, the 61, and the 38 sitting here. The 38 happens to be right where we found a lot of support in the overnight session here, around, I think that's what, like 9 p.m. or something, right around 9 p.m. And then we launched out, and then we pulled back, and we held it again around midnight. Again, this is Pacific time. And there was also a pretty strong resistance here for about an hour in the overnight session. So this little pocket right here, being that it's also the 38% retrace, would be something I wouldn't be surprised to see there to be trouble this morning if the bulls come up. So I'm going to pull this over, and it's going to be a little zone from 44.09 to 44.10 there, 10.50. So let me see if I can get this to cover the full day. And again, it's going to be 09 to 10.50, so a little 2-point pocket. That would be a zone that makes sense to me. Of course, we have the VWAP in the way, right? So there are some more aggressive moving averages on our shorter time frames and some little things in there. And then we also have the retracement of the overnight session itself, and the 61 as well is kind of sitting right there. And I don't want to get too much into the really, really small stuff. I was just curious to see where that was. So coming up, we've got VWAP there. That's going to be a dynamic level that's constantly changing. So I can't really call a specific level out for that. If that breaks, again, 09 to 10.50 there. A little bit further is our orange power level and 50% of the previous day. That zone right there is a critical area we want to see the bulls get through, just for starters. It's going to be kind of our first clue that, hey, maybe the bulls do have some strength here this morning, if they can get through there. Now, they're not out of the weeds because we still have the 61.8 retrace of yesterday, which is right here at 31.25. And so this whole little zone that's must be marked from yesterday, 31 to 34, is still in play this morning, especially, let's see, let me bring this out. I'm going to bring it out to the 15th. That way we have it covered here. So this is some of the stuff we're seeing in the short term. This whole shaded region up above there, this 45.50, I'm going to go ahead and actually get rid of that. So we have 45.50 itself. What's really standing out to me though is this whole section right here, just about 50 to 54. So if the bulls get through 45.50, I'm looking at this 50 to 54 zone as a potential contention zone for the bulls. And we're getting really close to the open here. So hopefully we've already covered everything that's below us. Hopefully in this kind of close period here, these little areas will help you to orient yourself for potential shorts or potential targets if you do get long. All right, so 50 to 54. Obviously the high of yesterday is up here around 66 to 67. And then from there, it's up to 74 and 96. So I got to jump down to the short time frames and get into the member section here because the market is about 10-20 seconds from opening. So have a great day. We'll be back one more day tomorrow, and then we're going to have our 3-day Easter weekend. So see everybody then.